Oh, yes, Altria is on my list, but I don't think it's on the list this week. Okay, so I'll put it into the calendar. Watch, this is how I do it. M-O. Okay, Altria paid out its dividend today. So if you wanted to get the dividend of Altria, you had to buy it on or before today. Okay, so I'm not going to look at Altria again for another 12 weeks. Tomorrow they will be assigned. Yes, James, they will. Can you mirror the screen on TikTok? I can, Dylan, but if I do, I can mirror it on this one camera. Okay, but that camera, that camera, and that camera all be backwards, and it throws my mind off, and I am hugely not this. What am I looking for? So I was build up a portfolio. You're saying increased dividend stocks are the best. Lee, that's not what I said. I said, okay, I'm not telling you guys what to do anything. Okay, you got to get this thing right. First of all, I'm not saying what to do at all. I am sharing what I do. Okay, this is what I do. I created this trading strategy for my 9-year-old daughter back in '08. And it's 5 major criteria that had to be met. It had to be simple. It had to be safe. The income had to be predictable and consistent, and of no way she could possibly lose. So we had a couple of rules. Rule number 1, never ever buy something you're not willing to hold on to for a long time. Rule number 2, never sell at a loss. Rule number 3, make sure the company had increasing dividends consistently for more than 20 consecutive years. Rule number 4, have weekly options. There was a few other rules in there, but I think one of them had to make sure the numbers worked and make sure the charts looked okay. Okay, all very strict rules. She was 9 years old, and she averaged about 5% per month. Okay, so that's not bad for a 9-year-old little girl. So at 9 years old, she could grasp it. It took her a couple of days before she figured it out because it's relatively simple. Because once you create your list, the list is pretty easy. You get the dividend kings, the dividend aristocrats, dividend achievers, dividend champions, dividend challengers. You get those lists right there. And you have a good set of companies that have increased consistently every single year. And then again, I always use Warren Buffett's list. Now, for those of you that are new here, let's click on this little doohickey, go over here, and slide on down to that thing right there, which says Warren Buffett's list. So let's take a quick gander. For the month of March, here you go. These stocks right here are all Warren Buffett's. Okay? And then the month of February, we had those stocks. And the month of January, we had these stocks. Now, why am I only showing you 3 months? Well, the reason being, because there's 4 quarters in a year. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. The list goes from week 1 to week 13, because there's 13 weeks in a quarter. So you week 1 to week 13, week 1 to week 13, week 1 to week 13. It's pretty freaking boring. The same stocks over and over and over again. If you look right here, American Express, Bristol Myers Squibb, Globe Life, MasterCard, Verizon, and AbbVie, Procter & Gamble, Bank Mellon. Okay, the first 3 weeks of the quarter. Guess what's coming up next week? The first 3 weeks of the quarter, the second quarter. And I'm going to be looking at these exact same stocks again. Okay? And then the third quarter, I'll look at these exact same ones again. The fourth quarter, the exact same ones again. Why? I jump in, get that 1%, and I jump the hell on out, and I say, thank you very much. See you next time. Okay, let me read some of these questions. Okay, so if I was trying to build up a portfolio, are you saying increased dividend stocks are best? It's not what I said at all. What I said is I only invest in dividend stocks that have consistently increasing. That's all I said. This is what I do. If you want to take a look at what I do your own due diligence and figure out if, hey, does it work for me? Because remember rule number 1, never buy something you're not willing to hold on to for a long period of time. So if you're looking at MasterCard, it's like, oh, do I like MasterCard? Do I want to hold on to it for a long period of time? What if it goes down? Well, it's on my list, and if it's on my list, I don't even question it. The only thing I question is, what does the 1-year chart look like? What does a 90-day chart look like? What does a 30-day chart look like? And what does a seasonality chart look like? And if all 4 of those look promising, then I go to the numbers. What do I mean by the numbers? Well, hang on a little bit and you'll see exactly what I mean by the numbers. Because if it makes me 1% or more, I will get it. If it does not make me 1% or more, I'll say thank you and I'll go on to the next one. Okay, do you need a special account to trade options? You do have to be approved for options, but getting approved for options is easy. What am I missing here? Way too quick. Hey, fascinating football videos. I missed something. All right. Rule number 5, listen to that. G. Knowles, thanks for that. So, can you name a few of the stocks for us? I just did. Okay, American Express, Bristol Myers Squibb, Globe Life, Mastercard, Verizon, AbbVie, Procter and Gamble, Bank Mellon, Ally Bank, ALN, and Wells Fargo. That's just for the month of January. That's on Warren Buffett's list. I got like 7 or 8 lists. I had G Downs at number 5. I like that one. Okay, PD. Do you know any trade sites around the world currency? Like just straight currency exchange. Sorry, PD, I don't do that. There are other websites out here. You know who's really good at that? I'll think of his name in a minute. What platform do you use to execute all your trades? I use Thinkorswim, which is owned by Charles Schwab. This happens when you get old. You have a tendency to forget things. Good evening, fascinating football fan. Draft, nice to see you. Doc's around. Hey, Doc, what's the best way to look up future EX dividend dates? Can it be only through Thinkorswim? Well, Doc, I usually look at last year's, because basically all these stocks trade the exact same time. I'll give you a quick for instance. This right here, this is 2024. Okay, American Express, Bristol Myers Squibb, Globe Life, Mastercard, Verizon, AbbVie, Procter and Gamble, Bank Mellon. Okay, so let's look at 2023. Oh, look at this. American Express, Bristol Myers Squibb, Globe Life, Mastercard, Verizon, AbbVie, Procter and Gamble, Bank Mellon. Let's go to 2022. Come on. American Express, Bristol Myers Squibb, Globe Life, Mastercard, Verizon, AbbVie, Procter and Gamble, Bank Mellon. Okay, 2021. I'll give it a minute. Oh, there we go. Bristol Myers Squibb, American Express, Mastercard, Globe Life, Verizon, AbbVie, Procter and Gamble, Ally, blah 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 blah. They do it the exact same year, year after year after year. Okay, so if I want to look up what's happening up next year, 2025, it's not posted yet. Okay, now if I go back, there's January 2024, February 2024, March 2024, April. See this? Only half of April is posted. Okay, so yeah, they're a little slow on the posting. Okay, next question. So your goal is 1% per week. Does that mean you make 50% annually? All right, Randall, what basically that means is I'm going to share something with you. You ready? Come on. All right, now this is the 10-minute trader. Okay, the 10minutetrader.com. This is my website where I post all my trades this year. Okay, week 1, week 2, week 3, week 4, week 5, week 6, so on and so forth. So there you'll see 4 positions: Ford, CVS, General Motors, Macy's. Okay, Ford, blah, blah, blah. 2.1% first week. Okay, you'll see 2 accounts. One is a cash account, which is all cash. The other one is a margin account. Okay, one has $120,000 in it. The other one has $200,000 in it. Now, the $200,000 account is 100 in cash and 100 in margin. Margin money is borrowed money. Okay, I have to pay interest on that borrowed money. Now, I do highly suggest you do not use borrowed money until you know what you're doing. Okay, so I've been doing this for over 20 years. But look at the returns on the borrowed money one. 2.38, 2.5, 1.3. Okay, every one of my trades this year, week 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, these are all my trades this week. So if you're curious about, Randall, if I make 1% per week, I am currently at 21% over on this count and 45% over on this count. And we're not even done with the first quarter yet. Okay, now this year is freaking nuts. And no, it's not like this all the time. Okay, we're in an up year. It's an election year. Things are going to go crazy. And then probably sometime, who knows when, we're probably going to have a pullback. Are the numbers still going to work? Don't know. Okay, I'm going to quote John F. Kennedy. We cannot answer the questions of tomorrow with the information we possess today. Okay? So, I buy on Monday and I sell. I buy my stocks on Monday. I sell my options on Monday. And then Friday afternoon, we have to calculate what we're going to do for the next following week. Now, this afternoon, for those you don't know, I do have a live trading group that trades with me consistently. Okay? Now, we're on Monday, Tuesday, Wednesday, Thursday, 9 a.m. until 10 a.m. Sorry, 9:15. Okay, so I do my podcast. You all listen into my podcast, and I do my trades, and I answer questions. Okay, Monday's usually all basically trading. Tuesday, Wednesday, Thursdays, lots of questions and answers. Friday, we go in at 3:30 to find out where the positions are and are there any adjustments. Now, that is a paid service. If you're interested in that, you can go back right up to there. Okay, and if you're interested, here you go. YouTube. Okay, YouTube, Twitter, Facebook, Instagram, podcast. Yes, I've had no podcast for over 4 years. LinkedIn, Patreon, TikTok, all the books I've written, and my live YouTube, which is live right now, which should be this screen. Okay, so all that being said, let's get back to our trading. Okay, that's what we're here for. We're here to learn. Hey, Calvin Hill, that's who it is. You want to look at cryptocurrency or anything like that? Calvin Hill's the man you go see. Okay, now beware, because Calvin Hill has more imposters than I do. Okay, I got 8 imposters, 8 people pretending to be me. Okay, now when I say if you want to talk to me, DM me with your phone number and I will call you. So if you DM someone with your phone number and they do not call you, then that's not me, because I call everybody who gives me their phone number. Okay, so back to the questions. Here we go. All right, we're up to, all right, I'm up to speed on the questions. All right, let's do this. All right, so what should we look at first today? How about some JWN? Because JWN's on my list for next week. Why? Because the numbers just look good. JWN. Now, JWN already paid out their dividends. However, the numbers still look good. And there's certain stocks I'll just keep on trading because the numbers look good. Walgreens consistently gives me over 1% every week. And I've had them for like, wait a second, let's find out. Find exactly how long have we had Walgreens, WBA. There we go, right there. Check it out. February 5th, the first week of February. So that's all of February and most of March. So that's 1 premium, 2, 3, 4, 5, 6, 7, 8, 9. 9 premiums and 1 dividend from Walgreens. And almost every single one, except for, okay, 1, 2, 3. All right, 3 of them didn't give me 1%. But, you know, 20%, 20 cents per share on a $20 stock, that's close. That's like 9.9%. What are your thoughts on BMY? All right, Delance, we're going to get to that one. Let's go back over to here. We'll put BMY on the list. BMY, Bristol Myers Squibb. Gotta like that one. Oh, Kohl's too. KSS. Kohl's. All right, we'll take a look at those two real quick. Okay, we'll take a look at WJN. AWN. Now, how do you get Nordstrom's out of JWN? Okay, I think NRD. No, NRD, Nordstrom. Well, what do I know? All right, so let's take a look. Now, we already know the dividends already passed. We're not going to see the dividends again for another 8 weeks. No, wait a minute, another 10 weeks, I think. All right, so a year ago today, we were at 1657, okay? 1657, okay? Up, down, up, down, up, down, up, down, up, down. Okay, I love it when a stock has a consistent movement. Okay, when you see the up and the down, the up and the down. Because stocks only move 2 ways. They move up, they move down. They're not going to come over, mow your grass. They're not going to trim your hedges. They ain't going to wash your dishes. They go up, they go down. That's all they do. Okay, now if you buy one that shares out their profits, I do after hours trading. Aha, well, good for you. I don't. All right, so a year ago, we were at 1633. The high of the year was the end of July, and that was 2355. The bottom of the year was the beginning of November at 12 $12.79. Now, the last 90 days, we want to go right here. 90 days ago today, okay, the 90-day bottom. Okay, there it is. 90-day bottom's there. Nice escalation from the 90-day bottom to the 90-day top. I love it. Look, up, down, up, down, up, down, up, down, up, down. I love it when they have consistency there. Al, how you doing today? Are you a day trader? No, I am not a day trader. All right, so we have a 90-day bottom 90 days ago, 1373. Our 90-day double top was at 1288, and that was the end of February. Oh, JNW is the founder's initials. Well, that's cool. I didn't know that, Simon. You learn something new every day. All right, so we went down just a little bit, and then we gapped down. Now, I've been telling this for a while. I don't know if you want to agree with me or not, but here you have a low here, and look at the escalation. Nice escalation from a low here. Nice. Now, if you don't take your profits, what do you think is going to happen? Yeah, the market maker took it away from you. He gapped it down. So he took all that space right there away. So if you didn't take your profit while it's up here, he took it away. Now it's way down here. Okay, so let's go to the last 30 days. 30 days, right there. Okay, 30 days ago today. Okay, 30 days ago today, right here. We opened up at 2020. Okay, went up a little bit, got a double high at 2191. That was on the 28th and the 29th. Your strategy doesn't sound tax efficient. Can you talk about that? Whoa. Okay, here's an idea. If you're worried about taxes, then you sound like you're the kind of person who goes to a Rolls-Royce dealer asking him what kind of gas mileage he gets. Does that kind of make sense? Okay, so if you're going from, let's say, 5 to 8% a year on your returns, now you're getting 50 to 70% per year, and you're worried about taxes, you really need to talk to a tax strategist. Not an accountant, not a bookkeeper, okay? A tax strategist. A tax strategist will show you how to set up your accounts, how to set up your financial life so that you pay the least amount of taxes whatsoever, okay? And then do some research on your taxes, and you'll be quite enlightened. All right, so as I was saying, we have a double high. That was the 28th and 29th of February. She drops down, goes a little bit up, a little bit down, and then we have a new bottom, new double bottom here at 1680. That was the 18th and the 19th. Okay, 3 days up and a little bit of pullback today. Okay, so we're sitting at 1904. So the very last trade, very last trade was 1904. So let's take a look at the seasonality chart. Now, for those of you that are new here, seasonality is basically how has a stock reacted over the last 20 years. Okay, you take 2014, 2015, 2016, 2017, 2018, so on and so forth, all the way up last 10 years. Okay, how has the stock? So the blue line represents the movement this year, January to where we are today. This line right here represents the whole year from January to December. Okay, January 1st to December 31st. Okay, what is done in this time frame right here? This time frame right here, right where we are. So what I want to do is I want to take my mouse, click on right there, click and drag to the right. She's basically for the next couple of weeks, she's going to go sideways. No big ups, no big downs. Yo, Carnival CCL is being traded all-time low. You think it would go up? All right, well, let's take a look at CCL. Okay, I bought CCL before. James, I'm averaging 2.6 over the last 4 weeks using a strategy. GL, that's awesome. I almost feel bad for you, dude. All right, Go Sox. The strategy sounds so bad for taxes. I will probably only bring home 35%. I feel bad for you, Go Sox. And if you haven't talked to a tax strategist by now, you've been here for a while, so you should know. Okay, now, for those of you that are new here, I'm really good with names. Okay, Go Sox has been here for quite a while. If you're bitching and moaning about 35% taxes, you need to go talk to tax strategists. KSS was a thing of beauty. Yes, it was. I have no idea what that means. But still, Go Sox, you really do need to talk to a tax strategist. Okay, corporate taxes, depending on which state you incorporate in. Okay, corporate taxes can be as low as 10 or 15%. Okay, and if you put it into pension fund, you put it into your corporation's pension fund, that's non-taxable until you take the money out. Oh, I didn't say that. You didn't hear that from me. Okay, so let's go back to where we were. Okay, so this is JWN, which is Nordstrom's. Okay, you can go Roth IRA and get free trades. All right, Jeff, if you're having faith in the government, thinking that eventually they're not going to tax that, yeah, you're in for a treat. All right, self-managed Roth IRA. There you go, Lone Wolf. T, can we play that next week? Have the dividend in April. Can I join you? Junie B. Jones. Jump on in. The water's warm. You want to look at T? All right, user 57163599994. Whatever. What were your parents drinking or smoking that night when they named you? Really? What kind of a name is that? Anyway, I will look at AT&T, and you'll see why, even though it is on the list, I very rarely buy AT&T. I'm a millionaire off of Solana. Well, good for you. That's awesome. Awesome. It's nice to have millionaires in the party. Come on to the party. We know who's picking up the tab. All right. So anyway, let's take a look at the numbers for JWN. The last trade was 1904, right there, 1904. The bid 1902, and the ask 1919. So the closest one is going to be the 19. Book made me rich. Okay, cool. And NOS. Okay. Please let me join in video. All right, Junie B, I only let people join in video after you DM me with your phone number and we have a nice conversation. Okay? We have a nice conversation, and then next time you can join, because I don't want to hear about cryptocurrency. I don't want to hear about Amway. I don't want to hear about NASCAR. I don't even want to hear about Tom Tebow. I don't. Do you invest in real estate? That's a separate conversation, Seth. Right now, the conversation is dividend investing for weekly cash flow. Let's talk about lithium. I don't know anything that has lithium in it. Okay, so JWN, the last trade, what I can buy it for first thing Monday, 1919. So we want to look at next week's 19, and that's going for 38 cents a share. Please, I'm self-made millionaire. I'm only 28. Good for you. There's a lot of self-made millionaires. Okay, but I have no idea what you want to talk about. So if you want to talk, send me a DM with your number. I will give you a call. Okay, and I will have a conversation with you. And if I feel you can contribute to the conversation, I'd be more than glad to have you on. But until then, no. Sorry, I don't bend the rules for very many people. Actually, I don't bend the rules for anyone. Okay, time to mute everyone. Yeah, it does sound like that, doesn't it? Okay, so as I was saying, if you're curious how you get 1% per week, okay, look at JWN. Okay, Nordstrom's. Okay, Nordstrom's. You know who Nordstrom's is. Okay, it is a household name just about, Nordstrom's. Okay, so Nordstrom's, I could buy it first thing Monday morning at 1919, right? And I could sell the 19 for 38 cents. That's 1%. CCL. What the heck is CCL? Carnival Cruise Lines. Yeah, that's on the list. I really want to learn how to tread, but I don't know where to start from. Now, I don't know what you mean by tread. It's like treading water, treading a tire, treading a tree trunk. I have no idea. Where are we? Oh, CCL. Now, does CCL pay dividends? Well, let's find out. CCL. Carnival Cruise Line, the fun ship. Okay, not in March, not in February, Not in January. Oh, so you want to learn trade? Well, chill. Okay. CCL. Okay. Whoever mentioned CCL, Carnival Cruise Line, they don't pay a dividend. Okay. Okay. So look, month of January, no dividend. Month of February, no dividend. Month of March, no dividend. Okay. What's your favorite dividend paying stock? I would have to say Ford, because it's so easy to get in and get out, and it's really cheap. All right. So BMY, Bristol Myers Squibb. What kind of a name is that? Bristol Myers Squibb. BMY. Okay, BMY right there. The 4th of April. Okay, so we're right here. We have next week and then the week after. Okay, we had 2 weeks to Bristol Myers Squibb. All right, Sarah, hi from Atlanta. Way to go. Okay, S, my thoughts on Tesla. Tesla's a big fat no. Okay, the reason why Tesla's a big fat no, it doesn't pay dividends. So it doesn't meet one of the very important criteria. Thoughts on GOGL? That's a no also. It's not 20 years of increased dividends. Okay? Okay, now you guys, remember, 20 years of increased dividends. Verizon is on the list. We're going to take a look at that in a minute, Jose. All right, so right now we're looking at Bristol Myers Squibb. BMY. BMY. First thing I want to look at is what I can buy it for, 52.07. The 52s are going for 53 cents. That's just a smidge under 1%. Okay, do you really want to go under 1%? I'm here to learn. S, well, just chill out and watch what we do. Okay, so first thing I want to look at is the trade grid. Okay, the last stock price. Okay, what's the bid, what I can sell it for? What's the ask, what I can buy it for? Okay, then there's the volume, the open, the high, the low, so on and so forth. Then you come down to the option chain. This is the option chain down here. Now these are all your strike prices. 50, 51, 52, 53, 54, so on and so forth. The last trade was 52.07. So the closest strike price is going to be the 52. And the 52 I can sell for 53 cents. But that's just a smidge under. Okay, a Lone Wolf, divvy in August. I have no idea which one you're talking about, Lone Wolf. Really don't. Okay, I only do stocks every quarter. Okay, every 90 days they pay a dividend. Pepsi is on the list. Okay, we'll put Pepsi down, but I don't know if it's trading this week or not. Okay, it is on the list, but if it all depends on where it falls. Okay, so we're looking at Bristol Myers Squibb. Okay, BMY. First thing I want to look at, where's the high of the year? Where's the low of the year? Where was it a year ago? And where is it now? That's what I want to see. And it takes less than 2 seconds. High, low, where was it? Where is it? Please, how can I start trading for you? All right, mini love. Chill, relax. I'm going to be here until 11:30. Okay, so just chill, watch what we're doing, see if it makes sense first. Make sure it makes sense. All right, does NVIDIA pay dividends? Yes, it does. You're paying $800 for a 4-cent dividend. Okay, now does that sound logical? Okay, now I don't know why everyone is so in love with NVIDIA. NVDA. All right. Now, see NVIDIA? Last year, 250 bucks. Now it's up over 940. Do you know what the dividend is for NVIDIA? NVDA. Okay. Now, you can all see this right here. NVIDIA. Okay. The 5th of March, Cinco de Mayo. Okay. It's paying 4 cents. Did you hear that? 4 cents. So you explain to me in a manner in which I would understand as if I was 4 or 5 years old, because as an adult, it doesn't make any sense. $940 to collect 4-cent dividend. Why the heck would I want to do that? Think about it. Why would I want to do that? And has NVIDIA increased its dividends for 20 years or more? No. So it's not even on the list. So I don't know why people are falling all over themselves trying to buy this crap. Capital appreciation. Seth, if you're looking for capital appreciation, I've told you this before. You have been here long enough, and I have told you, I do not do capital appreciation. I'm 60 years old. If this goes down and I lose my money, no, thank you very much. Sorry. Safe, secure, predictable, and consistent. That's my only concern. Okay, I don't care if I buy it and it goes to the moon. I really don't. I want that 1%. I want to buy it at $100, sell it to someone else for $100, and collect that $1. Okay, that 1%. Because I'm perfectly happy getting 1% per week. And that's over 50% per year. And if you're not okay with 50% per year, you're at the wrong place. I think it's a thought of investing in the future, kind of front-running the future innovation. Yeah, I get that. I do. But I'm 60. What do you think my future is going to look like? You know? What is your return on your investment for the year? It's growth investment. It's not that you. Okay, whatever. Okay, Mike, you're 62? Cool. Well, Mike, I don't know about you. I could go back to work if I wanted to, but I have enough to be comfortable. I'm 19, so I really invest in strategy in a very different way. Yes, you do. And if I was 19, I would buy crap like NVIDIA also. Does Alcoa pay dividends? Yes, I think it's AA. AA is on the list, but I'll put it down, but I don't think it's up for this week. Okay? Reasons why I followed you. Oh, there you go. All right, so anyway, yeah, I don't do NVIDIA. 20 years or more of increased dividends. It's really not that much to ask, guys. Make sure whatever you're suggesting has 20 years of increased dividends and weekly options. I'm all for the future innovations. Hope the future good. Yeah. Okay, what about 5% high interest savings account? Why not just do that? Okay, I don't know any interest savings account that gives you 5% per month. PDI, please. Monthly dividends, thank you. JPM. Well, JP Morgan's on the list. PDI. I don't know what PDI is. JPM. Now, you will hear me every once in a while saying that's on the list. Marvell. Marvell is on the list. We even looked at this morning. MRVL. All right, we'll take a look at that also. Now, you will hear me say when you suggest something, like, what the heck is that? It's not on my list. And if it's not on my list, guess what? It means it's not something I even look at. All right. Is the calendar on your screen, Thinkorswim? Is there alternative website? Seth, I really couldn't tell you. I've been using Thinkorswim for over 15 years. Love to hike. Good evening. JPM raised their div. Cool. Squirrel. Yeah. All right. That's my cue that I'm getting off topic. Okay, so next one's going to be on the list. BMY. It didn't really get. It get like 0.9, 0.95, just a smidge under 1%. AMT. I'll put that on the list also. AMT. All right. Next one. Kohl's. Now, Kohl's did pay their dividend this week, and I did cut me some Kohl's dividends. Thank you. KSS. And if you guys seen it, I did a couple of Kohl's videos lately. So Kohl's paid their video on Tuesday. They paid their dividend on Tuesday. Okay, so it's not on the list for next week. And I don't think anybody has Kohl's still because Kohl's made a nice little jump. Does anybody still have Kohl's? Disregard AMT. All right. I can do that one. Does anybody still have Kohl's? I mean, are we going to waste our time looking at it, or is it something we need to look at? Anyone? No comments? No. No. Nope. 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 All right. Fine. We won't look at Kohl's. Oh, fascinating football video. Why do you still have it, dude? You should have gotten rid of it. Well, Mike, you still have it too? I got out by setting the limit order for my purchase price, 26. Okay. But you don't need to look at it. I still have Kohl's. All right, so some of you still have Kohl's. So let's take a look at it. All right, so Favorite shipping stock. All right, Lee, I don't categorize my stock that way. Okay, I look at what companies have increased their dividends for more than 20 years. Okay, and I throw it in there. Invest with Willie. Nice to see you again. You were here before. All right, CX. No, that's not on the list. Okay, we're looking at Kohl's. Sorry to disappoint you. Okay, now, what you're saying is true, Mr. Willie. However, what you're missing is the strategy had to be simple, had to be safe, predictable, consistent, all that kind of nice, neat stuff. For my, wow, the wife's out here making fun of me. She's giving me these weird hand gestures. She thinks it's funny. All right, so let's take a look at Kohl's. A year ago today, we're at $22.56.
I took a look at the whole racket at Kohl's today.
Yeah. Okay, we got a high for the year, beginning of August. That was $29.68. The bottom of the year was October 12th. All right, now let's look at the last 90 days. 90 days ago today, it wasn't quite a 90-day low, but it's pretty close to the low. Okay, all over the place. Look at that. Look at that movement for Kohl's. Okay, so 90 days ago, we opened up at 22.81. A couple of days later, we have our bottom at 22.21. And that was the end of November of last year. Now, she jumped up to a double high at 29.44. That was the end of December. Okay, so we have profit taken up, profit taken up, profit taken up, profit taken, blah, blah, blah. Okay, so the last 30 days. Okay, 30 days ago today, we opened up at 27.55. About a week and a half later, we have our 30-day high at 28.92. Okay, right here. Then from there, she drops. That's like 2.5 weeks to get to the new bottom. Okay, the new bottom was Tuesday. And that was 24.22. Now, I had Kohl's at 27.97. It looks like I'm going to have Kohl's again next week because that wasn't in the money at all. Okay, so 3 days to the upside. Today there was a little bit of pullback. Kohl's in this particular account. I sold the 26s. Yep, that's gone. All right, so yeah, I've had Kohl's since the beginning of March. So 1, 2, 3, 4 weeks. Is that 3 weeks? No, 3 weeks. I've had it for 3 weeks.
Like, comment, subscribe.
Like, comment, and subscribe. Yeah, you guys know the rule. Yeah, like, comment, subscribe. Let's get us up to 10,000. I'm shooting for 10,000 followers. Reason being, then I can use the TikTok studio. This TikTok studio. That way you guys can see this screen on this screen. I make it a little easier. Do you like Blackstone? No, I do not like Blackstone. Sorry, Kingfisher. All right, so that's Kohl's. Now, if you want to take Kohl's into next week, 312 Kohl's, 27.31. 27's next week. Mike's going for 31 cents. ABT and DG, Dollar General, DG,
hey Mike,
Dollar General, and Abbott Labs, ABT. Abbott Labs is a dividend king. Can't go wrong there. All right, so your Kohl's, you could buy it for $26.48. The 26.50s are going for 50 cents. That's more than 1%.
Less than I spent there.
Okay, Mike said hello, honey. She's over there having a cigarette. No, not a. No, she's having a cigarette.
I don't really care who you.
Hi, where can I see an example of how you input an order? Well, let's do one right now. Okay, let's say hypothetically speaking. Okay, I use Thinkorswim. Okay, so if you're gonna follow along, you might as well use Thinkorswim, because I don't know what trading strategy you use. So you come over to the bid or the ask, right? The bid is what I can sell it for. The ask is what I can buy it for. So if I want to buy it, I click on the bid. Okay? And it automatically fills right there. Figure out how many I want. 100, 200, 300. Because to do a covered call, you need to buy in increments of 100. All right? So I would buy it at 100. I would confirm, okay? Confirm it. What happens there when you hit the confirm? It'll give you the order, okay? Buy 400 KSS at 2648 limit order to open. Okay, it's just opening it. Now, once you own it, get out of there. Get out of there. Okay, once you own it at 2648, you come down to the 2650 and you would sell. Okay, now if you just bought 400, you would sell 4. Whoops. Okay, right here, sell 4 contracts of KSS, which is Kohl's, 28 March 24, which is next Friday, and the call strike 2650. My trade is open right now, okay? All right, do you have any BKCC before TCPP merger, such a display? Sorry, Mikey, I don't. Okay, and then you just fill in what the price you want to receive are, and then limit order, and then all that kind of nice stuff. So you should already know this stuff before you get started. Okay, so what I'm doing is I'm putting together this weekend. All right, so what I'm going to do up on the website, I'm going to make available to anyone and everyone an outline of the new program that I'm creating. Jump on in, make it. I'll even leave it as a Word document. Okay, as a Word document, you can download it, take a look at it, and just make additions to it, and send it back to me, and I will create the whole trading program from beginning to end, but asking for your opinions. Okay, I got it. Very clear. How do you select the strike price at a 20 delta? Whoa. Okay, now you want specifics and being educated in the Greeks. That's an extra 50 cents there, sir. What I'm saying is, user 2319. Okay, this trading strategy was created for a 9-year-old. It had to be simple. Once you get into the Greeks, open interest, volatility, and all that kind of crap, you loser. Okay, now let me share with you something. Get a kick out of this. I get a kick out of this every once in a while. Alrighty, going over to YouTube. Okay, my videos. Okay, waiting for my videos to load. Nice fast internet service. Date. So I take a look at the older ones. Here we go. You think she's gonna know the Greeks, the implied volatility, open interest? Yep, whatever, JC. Okay, so that's my daughter. In this particular instance, she was at 12 years old. We started this when she was 9. Okay, she's my twin. Yeah, gee, thanks. Okay, so she was 9 years old when I taught her this strategy. Okay, so it had to be simple. Okay, it had to be safe, predictable, consistent, and no way she could possibly lose. So if you want to talk about the Greeks and you want to talk about implied volatility, open interest, the delta is part of the Greeks, volume, expiration, or you want to talk about all that complicated stuff, right over her head, I would have lost her. Simple, safe, predictable, consistent. Dividend king, dividend aristocrat, dividend champion. Put them all onto one list, put them into the calendar. Okay, Put them into the calendar. Okay, what's this week? Oh, here's this week right here. Oh, this is the one we're looking at. That's it. This is one we're looking at, and we look at the 1 year chart, 90-day chart, 30-day chart, and the seasonality chart. If it all works, then she'd buy it. If it didn't work, she didn't buy it. Okay, there was no looking at the Greeks. There was no looking at implied volatility. There was no looking at open interest. There was no looking at any of that stuff. So how do you select the strike price from the call you sell? Good question. I'm guessing you are not a big gambler. No, I am not. I like things safe, simple, and predictable. All right, so how do we figure it out? Kohl's at this moment in time, let's get rid of this. Okay, this should be able to answer your question right now. Kohl's is at 26.48. What is the closest strike price to 26.48? Well, that would be the 26.50. Okay, you come right down here. Look at 26.50 right there. And that is selling for 50 cents. So let's do a little bit of math. For that, we're going to need our calculator. So if the premium on the 26.50 call strike is 50 cents, okay, the purchase price is $26.48. Oops, I had to go back. Divided by $26.48. My profit would be 1.88%. Now, is that more than 1%? Well, yeah, it is. Do I like Kohl's? Well, yeah, I do. Do I like Kohl's enough to buy it again and get 1.8% for the week for next week? Sure, why not? I like Kohl's. All right, Mikey, is your 9-year-old strategy just for entertainment purposes only, or do you think you're outperforming the S&P? Well, Mikey, this here, this little show, this little dog and pony show is for entertainment. Do I think I beat the S&P 500? Yeah, I beat the S&P 500 every year. Thanks, excellently. All right, but this is just for entertainment. I do suggest you all do your own due diligence. Okay, these numbers are all factual. There's no opinion in any of this. Okay, there's no opinion in any of this whatsoever. It is a fact that the last trade was what the last trade is. It is a fact what the bid is, and it is a fact what the ask is. The open, the high, the low, these are all factual numbers. These numbers will go down in history. So 50 years from now, you can say, what was the opening bid for Kohl's on the 22nd of March, 2024? These numbers up here will be there. These numbers won't. Okay, now these numbers are the option numbers. Okay, the only thing that'll be option numbers in the future will be the high of the day. That's it. They don't do all the option numbers for historical performance. What did you do during COVID when stocks were going down? Well, believe it or not, I still made money during COVID. All right, so that being said, that was Kohl's, and you saw Kohl's as more than 1%. That's how you do the math. Okay, you do, what am I buying stock for? What am I selling the option for? What percentage of the stock price is that option? Okay, the stock price is 26.48. Okay, the closest strike price, 26.5. And what can I sell that for? 50 cents. So if I'm buying it for $26.48, I'm selling somebody the right to buy it from me for $28.60 or $28.50, and they're paying me 1.8% for the week. Do I really care where the stock goes? No, not really. Did you still good in 08? Actually, I didn't do this strategy. I created this strategy in 08. Okay, if the stock price drops week 2, the strike price on the new call price you bought it for. Well, love to hike, Mike. Oh, love to hike. Well, it's all about the numbers. These numbers are constantly changing. Okay, what they are today, come Monday morning, they're going to be different. Monday afternoon, they'll be different. Okay, Monday at 3:30, they'll be different. Monday at 3:45, they'll be different. They change every 5 or 6 seconds. You're throwing a dart at a moving train while you're on the back of a, what did he say? It's like trying to shoot an arrow at a target on a moving train while you're a horseback blindfolded. I think that's how it was.
It's easy.
That's for you Star Trek fans. Okay, so was that why you created it? What happened in 08? Or was that was just a coincidence? My daughter wanted to learn what I was doing. Actually, I got fed up with her. She says, Daddy, can you buy me this? Daddy, can I have this? Daddy, can I have that? And I yelled at her, why don't you go get your own money? Go get a job. I'm only 9, Daddy. So she said to me. She said, well, can I do what you're doing? I said, sure. So I taught her. So I had to come up with a strategy. It had to be simple. It had to be safe. No ways you could possibly lose. The income had to be predictable and consistent. The only way you're going to get that is with dividend stocks that have consistently increases for 20 years or more. Dividend kings, dividend aristocrats, dividend champions, dividend challengers, all those. You don't sell stocks for a loss? No. Rule number 1, never ever buy something you do not want to hold for a long period of time. Rule number 2, never sell at a loss. Okay, since 08, everybody is up 400%, averaging 10% a year. We need another 08. Yeah, Mikey, I'm going to disagree with you there. Sorry. Was she doing options then or just stocks? She was just doing stocks then. And it was a different strategy back then, which is another strategy that I teach, but not here. Hey, Wade, nice showing up. I seen you. Uh-oh. Wade, do you want me to read it, honey? I recommend you staying away from Heinz.
So do I.
Catch up. Is Hershey on the list? Yes, Hershey's on the list. How are you managing if the stock goes down and you sold weekly option call? Well, if the stock goes down, it goes down. Well, I'll give you a perfect example. Hello, weren't you paying attention? Let's look at WBA. WBA, which is Walgreens. Okay, so I originally bought Walgreens at $22.46. Okay, I got 35 cents first week, which is over 1%. 35 second week, over 1%. 20 cents third week, not quite 1%. Fourth week, I got the dividends and 12%. And 12 cents. Next week, I doubled down. I bought some more. Another premium, another premium, another premium, another premium, another premium. So each one of these weeks that you see in red, it didn't hit my target. And I bought in the first week of February. All right, so that's the first week of February. Let's actually do the counting. Okay, so February 5th, that's week 1. The 12th, week 2. The 20th, week 3. The 26th, week 4. Now let's move into March. The 4th, week 5. The 11th, week 6. The 18th, week 9. That was week 7. Uh-oh. Fuck, I lost count already. That's funny. All right. 1, 2, 3, 4. I know. 4, 5, 6, 7, 8. 8 weeks. All right. So I've had Walgreens for 8 weeks. And Walgreens has gone down from where I bought it. So to answer your question, what happens when the stock goes down? Well, I keep selling covered calls against it. Okay, but I'm a little bit more leery of which ones I sell and how much money I'm getting. Hey, Calvin Hill, nice to see you here again. Okay, are you watching stocks that have 19 years increased dividends for potential this year or next? Yeah, believe it or not, if you have 1 or 2, I'd be more than happy to take a look at them because I'm always willing to add something that looks favorable. I would do an 18 or 19-year stock. It's just that nobody tracks them. So I don't know. I know when they get to 20 years. I don't really know when they have 19. Because you got to remember, there's 9,500 different stocks out there. Okay, and then there's 3,400 and something ones that actually pay dividends. So I'm not obsessive. I have enough stocks to take a look at. But if you know of something not on my list, I'd be more than happy to look at it. That's why I do this every night. I look for that golden nugget, which so far, I do have to admit, this year, I had 2. I've been doing this since January, every night for 2.5 to 3 hours, every single night. Everything you guys have mentioned to me, only 2 made it to my list. Okay, so dig deep. Dig deep, my friends. There's a nugget out there somewhere. Okay, so to follow up, if the stock goes down, then which strike price or call you sell? Well, it's each individually selected. Okay, so I really can't tell what it's going to be. So I'm going to quote Kennedy again. I cannot answer the questions of tomorrow with the information we possess today. Because I don't know what it's going to be until it's there in front of me. Now, last year I had Target. I bought Target at 135. It dropped. Then all of a sudden it gapped up. Then it went up. I finally be able to sell it for what I paid for it. Now I've only carried once. The longest I ever carried with stock, it was
Keep going.
Kimberly Clark. I think it was KMB, Kimberly Clark. I carried it for 9 months. Whirlpool was one. Right, Al. Whirlpool was one. Okay, it wasn't on my list before, but someone came up with Whirlpool. Same follow-up. Does a strike price have to be what you bought it for? No, it doesn't. Not at all. Okay, sometimes I'll go in the money, but I want that 1%. That's why it's always about the math. It would depend on how much down and what premium is, where the break even now lays. Nice. That's a nice explanation. That kind of works. Yeah, it all comes down to the numbers. Okay, when it comes down to the numbers, what do I mean by that? Okay, so we're here looking at this one here, which is Kohl's. We know what the stock price is doing. We know what the movement is. We know we had 3 days to the upside, a little bit of pullback here. Do we know what's going to happen Monday? No, we don't, because we have a pullback here. Okay, the trend, the upward trend, see that from here to here, has changed. Okay, so I wouldn't jump into Kohl's yet until it turns and changes again. Do you buy stocks with monthly dividends? Yes, but I don't buy stocks that have monthly options. AMHM, never heard of it. Now, if I've never heard of something, more than likely I've never heard of it for a reason. MHM, Bank of America Market, what is that? It has no option, so no. If your long stock goes down, do you ever buy back your call to reduce your cost? No. Your secretary, you're missing rule number 1. Never buy something you're not okay with owning for a long period of time. Buy it and then just take accountability for your actions. All right, I bought Walgreens. Walgreens is down from what I bought it for. Okay, I have no problem holding Walgreens for a long period of time. Okay, and I will continue selling options that are favorable. It just so happens that I sell them really close to what I bought them for. So I take a look at all the options I've collected and the dividend and how many weeks I've held it. And I do a little bit fancy math. Okay, am I still over 1%? Well, as Walgreens, I am. So I can take a little bit of loss on the stock price, okay, because I'm still over 1% per week on Walgreens. Okay, that makes sense? All right, let's jump on to the next one. We're going awfully slow with these. You guys have a lot of questions. Don't get me wrong, it's a good thing. Now, somebody want to look at AT&T. I can tell you right now, before we even look at AT&T, that it's a no. All right. Now, reason why I say that, number one, AT&T has its dividend coming up in the first week of April. It's right around the corner. Okay. Now let's take a look at the numbers for AT&T. 1698. So the closest one would be 17. Correct. 1698 was the last trade. So the bid 1699 and the ask 1702. Now, here's a little tidbit, a little bit I've learned over the years. The last trade, 1698. The bid, 1699. The ask, 1702. What does that tell you? That right there tells you, it's a little bit of a clue that the market maker is getting ready to push it up a little bit. When the bid and the ask are both higher than the last traded price, the market maker is pushing it up. When the bid and the ask are lower than the last price, the market maker is pushing it down. All right, to use Walgreens as an example, you would buy WBA for 30, and then if it goes down, you'd sell the weeklies. Well, WBA is at $20.58. That's $20.58. So the 30s is way out of the money and is totally worthless. What would you do if you get called on the call but is less than your purchase price? Well, number one, I wouldn't sell a call for less than the purchase price. Okay, now it did happen to me with Target last year because I wasn't expecting Target to gap up $16. Well, as a matter of fact, let's take a quick gander at it. I'll show it to you. EGT. Okay, now I bought Target right here in July at 135. She dropped all the way down to 102. 102, and I still hold on to it. Okay, what would you do if you get called on a call? Okay, so here's what happened. It went sideways for a little bit. Then November 14th. I'm going to remember that date for a long period of time. It was at 110. Okay, I bought it at 135. It's at 110. Now, I was selling the premium, but I wasn't selling 135 because the 135 was worthless. So I was selling five strikes out of the money, the 115. Okay, got 50 cents. No big deal. Okay, now, I'm going to zoom into this so you get a good look at it. Okay, you see that? The 14th, look what happened on the 15th. It gapped up $16. Okay, so I had a choice. Now remember, I bought the stock at 135. Okay, it was at 110, and she jumps up to 126 and keeps on going. Okay, I had to buy those back, and I lost 15. I think it was $15,000. $15,000 I lost in that one trade. Why? Because I sold the option and it gapped up overnight. Who knew it was gapping up overnight? Now, every dividend and every premium I've collected since July, when I bought it, 135, I had to pay back. Okay, and I ended up holding it all the way into December before I could sell it at a profit. Okay, so I barely broke even with Target last year. Do I win all the time? No, I don't. I lost 3 of them last year. Target, PPG, and Kimberly Clark. Kimberly Clark I had for 9 months. 9 months. What can you do with 5,000? Ooh, I can get a pizza. Big one. Okay. WBA 2186 on 311. Okay, yeah, but which one did you sell there, Mike? Because if you bought it at 2168, did you sell the 2150s? I don't know, Mike, because I to some of the info, the little tidbits of stuff that you guys type in here sometimes doesn't give me a whole big picture of what it is you're talking about. Yeah, I know they expired today, but did you sell the 2150s? And if you sold the 2150s, more than likely you'd be back into cash on Monday, and you'd lose what, 18 cents? Are you okay with losing 18 cents? All right, so that's my Target experience. And yeah, every once in a while, you dance to the music, eventually you will pay the fiddler. All right. ACL, I just joined in. Can you give me a quick recap of your strategy, please? I can tell you write options. Yes, I do. No, it's 2058. Okay, so you're taking it into next week then. Okay, well, there's not wrong with that. I mean, it still has a nice premium for next week, All right, so, is it ACL? ACL? Wow, that's an interesting one. We buy dividend stocks, sell the covered calls against them on a weekly basis to capture a safe, secure, particular, inconsistent 1% per week. You just got here, you're new. I would remember that name. So let's just hang out for a little bit, see what happens, and see if you agree or you disagree. Okay, this is just what I do. I'm not teaching anything. I'm just sharing what I do. Okay, my opinion. How, what there, Mikey? All right, so where was I? Okay, that was WBA. What is next? All right, T. Did we say no to T? How do you lose on a covered call? Oh, all right. Well, you see this? This is target right here. It was at 110. Okay, this was Monday right here at 108. I sold the 110s. Wait a minute, I didn't sell the 110s. Stock was at 110. I sold the what? The 116s, 114s, 115s, somewhere in that area. Okay, I sold it here. It gaps up the next day. Okay, so whoever bought that option for 50 cents, it was now worth 12 bucks. So I had to buy it back at 12 bucks. It was like 12,000 bucks or 15,000 bucks, whatever it was. Which of your books could you recommend to read in order to understand the system? Well, I always go with the first one. How to get 10 to 20 checks per month like clockwork. Where is that? Hold that thought. Dum, da, dum, dum. There you go, right there. Dividends for monthly cash flow, 10 to 20 checks like clockwork. Dividend aristocrats, trading with dividends, blah, blah, blah. Probably the best one to start out with would probably be receive 10 to 20 checks per month like clockwork. It gives you the origins of the dividend capturing strategy. Do you make any real money with this system? Hey, Sarah. Nice of you to join us. So on target, couldn't you just sell and take the premium only? Or did you have to buy it back? All right, Mikey. 12K. Jump change for Jamie. Yeah, thanks. No, not Gene. It wasn't. I give away all that money back. I actually just bought that book. Oh, cool. All right, so who's asking the questions? Sarah. All right, Miss Sarah. This right here is my website right here. Oops, let's go back up to the top. Okay, the10minutetrader.com. Let me fix this for you real quick so you get a better idea. All right. All right, the10minutetrader.com. Okay, dividend stocks, FP, and blah, 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 blah. Okay, so if you slide all the way down, right here, okay. Current trades, see that? Current trades for 2024. Account number 1, account number 2. Okay, so account number 1 started out with 117 at the beginning of the year. Okay, I've taken out 10,000 bucks already. And I've made 21%. Okay, so 21% of 117, that's 23,000. And that's for the first quarter. We're still in the first quarter. So we have this week, and we have one more week to go. Okay, so maybe I can get up to 23. Maybe. That's not bad for the first quarter. And then this account over here is a margin account. 100,000 cash, 100,000 margin. It's up 45% already. Okay, that's $45,000. So I don't know. So it depends on what you're working with. So 50%, well, 1% per week. Okay, 1% per week, safe, secure, predictable, all that kind of nice, neat, fun stuff. So whatever you're starting out with, just think of whatever 50% of that is. Okay, Sarah, so I don't know what you're starting out with, and I don't know what your goals are. Mikey G, okay, G knows, okay. I actually just bought that book, okay, thank you. I wrote that book 2012. What was that? 13 years ago? I wrote it 13 years ago. I published it 12 years ago. How much does one need to start with? My grandson started out with 50 bucks. Okay? And for the fun of it, a couple of years ago, I started out with, I had an account with 100 bucks, and I just put in 5 bucks a week, just to see how it would escalate throughout the year. And I don't really remember what it was, what the return was. But there's a bunch of different trading sites. Where was it? Okay, let's go back to something interesting. Okay, so that was WBA. Next one we're going to look at, somebody wanted to look at Pepsi. Now, Pepsi is on the list. Very first thing I always want to do is go to the calendar and put it in the calendar first. Pepsi, not in April. Okay, the first week of March. Check out Dickies. All right, DKS. It's Dickies. Dick's Sporting Goods. DKS. All right. So Pepsi is on the list. See it? That's March. January, February, March. So, all right, 13, 12, 11, 10, 9. That's week number 9. Okay, so we won't see Pepsi again for 8 weeks. Is your system good for general brokerage account? I really suggest you talk to a tax strategist, because once you start making a fat return, they're going to actually taxes out of you. What platform are you using? Tim, I'm using Thinkorswim, which is owned by Charles Schwab. You can actually go to thinkorswim.com and download it onto your laptop or your desktop. Okay, so whoever want to look at Pepsi, take a look at the numbers for Pepsi. I don't think I've ever bought Pepsi. Reason being, 172.14 to 172's 88 cents. That's not even 0.5%. Okay? You have some companies that give really good premiums, and some companies that premiums ain't worth it. What's the first step of starting with trading? SJ, your first step is understanding exactly what it is. Okay? You're basically buying a portion of a company. Okay? You're becoming an investor in the company, a shareholder. So once you own a portion of the company, they have one or two choices. They either share with you the profits, or they do not share with you the profits. Okay? The companies that don't share the profits are companies, I couldn't even name them. Tesla's one of them. They don't share the profits. Okay, now we looked at, where did we go? Where was it? Okay, remember FinViz, Financial Visualization? Has over 9,000 different companies. All right, so let's get rid of this. And we'll get rid of this. Okay, there are 9,000, the number's right over here, 9,510 different companies that you can invest in the stock market. That's a lot. And this scanner here will basically break a lot of them down with you. But I go right to the Dividend Kings, Dividend Aristocrats, blah, blah, blah. Okay. So you're saying it pays less than 1% of its value. Basically, yeah. Okay, if Pepsi right now, okay, I could buy Pepsi on Monday at 172.14. The closest strike price is the 172.50. And it's going for 88 cents. Okay, so we take the calculator. Okay, got to learn how to get good with this thing. And we take that 88 cents. That's your profit. That's your premium, not the dividend. It's the premium. Okay, and I divide that by the purchase price, divided by 172. Let me try that again. 172.14, and I come to a grand total of 0.5%. Okay, so Lee, Pepsi is offering only 0.5% premium to buy the stock. Okay, why would I do that? When you have WBA, what is that one again? Walgreens. All right, we looked at Walgreens. That's paying over 1%, and it's Walgreens. That's almost the same. Well, it's almost as much of a household name as Pepsi is. Well, at least here in the United States it is. Okay, now Pepsi may be worldwide, but Walgreens isn't worldwide. Okay, but Pepsi is worldwide. Walgreens is not. But Walgreens offers a better premium. So I would take Walgreens over Pepsi any day. even though Pepsi is a 100-year-old company. I think Walgreens is quite old. I don't know if it's 100 years, but it's quite old. Anyway, that's that. So with Pepsi, you buy 12,000 shares and you 12,000 shares and you sell. No. 100 shares. Okay, 100 shares equals one contract. Okay, 12,000 bucks. How much is 12,000 bucks into 172? Okay, hold on a second. 12,000 bucks divide 172. You got to be kidding me, really? 172 divide 12,000. That can't be right either. That's only 69 shares. That can't be right. A 100 shares is 8,000. Holy cow, 100 shares is 17,000 bucks. Yeah. Well, there's your answer. Yeah, no, see, I wouldn't do Pepsi because it's only offering 0.5%. And once you get up to 172 bucks with 12,000 bucks, you should stick to companies that are right here. Look at this. Hold on. Go at the lower end. Okay, the lower end. Okay, NYCB 350, KW 826, AMCR 923, NWBI 11 bucks, NUS 12 bucks, Ford 13 bucks, FHN 15 bucks, KeyBank 15 bucks, AT&T 17 bucks, PR 17 bucks, RF 20 bucks. So stay away from the the $172 stocks when you have that little bit of money to work with, because 1% is 1%, no matter which way you look at it. Okay, so if you buy 100 shares of Pepsi at 17,000 and you get 1%, that's only 178 bucks. Okay, if you take that 17,000 or that 12,000 and you put it into one of these smaller companies, the lower value, 1% is still 120 bucks. AT&T and Ford would be a good start. Don't start with your entire portfolio unless you want to. I have no idea. Okay, so if you don't have a big portfolio, you can always do dividend capturing. Dividend capturing is when you just buy the stock, capture the dividend. You don't have to buy 100 shares of anything. You can buy 30 shares, 40 shares, 50 shares. You take your nest egg and you divvy it up into manageable. Okay, 4 to 6 positions, something manageable, not too unmanageable. Okay, so 5 positions at 12 grand would be, or six positions at 12 grand would be 2,000 in each. Okay, as soon as it got up 1%, you'd sell it, or it goes up 1.5%, you'd sell it. Okay, it doesn't matter if you can't buy a whole 100 shares and sell the option. The same strategy is still the same. Okay, so if you look at the stock price, let's go hypothetically back here. Okay, Pepsi was the 2nd of March. So the 2nd of March, what is 10 days prior to the 2nd of March? That would be the week of February 13th. Okay, so February 13th, right here, the opening of the day was 11.81. What's 11% of 11.81? That's 12 cents. You're looking at an exit part of 12 cents on top of that. That's 11.93. Okay, so the high of the day was 11.85. Next day, 11.85. Next day, 12.11. So you're out with 1% in 3 days. It's all the same. Didn't catch your website's name, The 10-Minute Trader. Any video you ever seen of me, hey, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. Okay. Hi, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. Hey, did we look at ABT already? Did we? Nope. And it's 10:30. We got 1 hour left to go. We haven't done very much. Next one on the list is going to be AA, which is, oh, come on, AA. Damn it. I don't know what it is. AA. Alcoa. Okay, the AA was in the second week of March. First week of March. American Airlines. No. American Airlines. I don't even know what that one is. Yeah, Alcoa. That was the second week of March. So we're not going to see this again for another 8 weeks. So it's no sense even looking at that one. You want to take a look at ones that you actually might be able to do. PDI. What the heck is PDI? PDI. PIMCO Dynamic. No dividends in March. No dividends in February. No dividends at all. Why would you suggest this if it doesn't have dividends? Alcoa as Catalysts just bought that for the first time in years. Okay, well, they already had their dividend a couple of weeks ago. Okay, so I won't look at it again for another 8 weeks or so. Sorry. PDI not on the list. JP Morgan is on the list. JPM. Okay, JP Morgan, the 4th of April. So it's not next week, it's the week after. So let's take a look at JP Morgan. And that's paying out $1.15. $1.15 for JP Morgan. 196.89. Okay. Yeah, that ain't worth it. Look at the numbers. Okay, the 197 is going for 117. The 195 is going for 253. So you add that together, that's 197. 197.53. You're only making like 60 cents. That ain't worth it. Please look at CME. Why are we looking at CME? CME. 214. Yeah, that's a no. Pretty quick, wasn't it? Okay. Purchase price $214. The closest one is the 215. 215 is going for $1.35. That's not even close to 1%. DNP. No options. Sorry, dude. Kylo, 1.5. 1.1 is 1% of the stock price. Is that it? Yeah. 1.1%. Yeah, that's it. I don't know which one you're looking at. Hey, Reg, how you doing? Reggie Joe Bo Jackson saying hello from Vancouver tonight. Please look at BOC. Who the heck is BOC? If I say something like that, it means I don't do it. Okay? No. Okay, so you guys are out there thinking you're going to find another diamond in the rough. Because I've been doing this for years. Only got 2. Okay? Now, if you think about it, January has 30 days. February has 29. And we're in 20-something. So that's 60 some odd days. 2.5 hours every single day. Every day. 2.5 hours every single day. And you guys always throwing stocks at me. And I've only come up with 2 that haven't been on my list yet. BAC. Well, that's a definite no. I can tell you that right now. BAC. A definite no. You ready? Look where it is. All-time high for the year. No. Okay, if you don't take your profit, market maker's going to take it away from you. Okay? Get a nice big fat gap down and you're going to lose it all. Bank of America. How close to dividend date would you consider trading? 2 weeks. Back, BAC. Hey, Calvin Hill's joining us for the 3rd time tonight. Or should I say the 3rd Calvin Hill's joining us. AA is up 7% for Tuesday. Yeah, I know, but Mike, the dividends already came and go. Okay, stocks have a tendency to move up just before the EX date. Okay, that's the reason why I buy them. They have a tendency to move up coming into the dividend. Okay, so 2 weeks before the dividend, they have a tendency to move up. Hey, please, I'm using Binance, but I need much more of it. I have no idea what you're talking about. People forget trades are like farts. If you force it, it might turn into shit. Wow, I've never heard that one before, but alrighty then. AI, no. So you buy them before the dividend goes up. That is absolutely correct. My boy Jewel, hey, you've been here before. I remember that name. Okay, so that's Bank of America. What are we looking at next? JP Morgan. Oh, yeah, JP Morgan was a no because the numbers just didn't work. Marvell. AL. Is there a stock with AL? Air Lease Corporation. Never heard of them. And they're a monthly. That's why I've never heard of them. Any opinion on... Yeah, that's Forex trading, dude. No. Cenex. No. CENX. Century Aluminum. No, it's a monthly. ABT. Abbott Labs. 110. The 111 is going for 75 cents. Ah, sorry, dude. Wait, so you play run up to the dividend, hold through? No. Mikey, I play run up to the dividend, sell the covered call. The premium of the covered call is 1% or more. How you take into consideration the chart when you buy it? Well, you see this one right here that we're looking at? Very first thing I want to look at. Where's the high? Where's the low? Where was it a year ago? Where is it now? Okay. It takes me 2 seconds. Okay. 2 seconds. See, high, low, where was it? Where is it? Okay. Do it with me real quick. You ready? High, low, where was it? Where is it? Okay. High, low, where was it? Where is it? Right now, it is at the yearly high, the 90-day high, and the 30-day high. Okay, you're that high right there. There's going to be profit taking. Okay, this from this bottom here. Look at that nice run up from here all the way up to here. That's some nice run up from 25 to 39. Okay, so you never collect a dividend. Not necessarily so. Okay, I think I've collected 3 dividends so far this year. Okay, now that's just a coincidence because I buy the stock. Okay, I buy the stock on a Monday, and I try to guess what it's going to be by Friday. Okay, so if I buy, let's say I do Abbott Labs, and I buy it right now at 110, 110.72. I'll look at the 111s. Okay, if it hits 111 or higher, I'm back into cash the following Monday. If it's less than 111, I will carry it into the next week, and I'll do another covered call. And I'll keep taking it into next week until it finally gets to my target. Now, I've done it 8 times with Walgreens this year. Okay, so I bought Walgreens 2 months ago, and I still have it because I haven't hit my target price. It just so happens that Walgreens gives me 1% almost every single week. So I'm okay with taking Walgreens. It goes back to rule number 1. Never buy something you do not want to hold for a long period of time. Thank you for that, Corey. Yep, I sell the premium, and the dividend is kind of like the cherry on top. Do I collect them all the time? No. Do I want to collect them? No, because the premiums are usually higher than the dividends. Every once in a while, the dividends will be higher than the premium. It all comes down to you're going to hear me say a few phrases over and over again. It's all about the numbers. Okay? You jump in, you take a look at it. Okay? If the 1-year chart looks good, the 90-day chart looks good, if the 30-day chart looks good, if the seasonality chart looks good, then it all comes down to the numbers. If I buy it in the morning, what can I sell the closest covered call strike price for? And what is that premium going to be? Is that premium 1% or more of the purchase price? If it is, then I'll buy it. Okay, if it's on my list, it's not a should I buy it or should I not buy it. For me, it's a definite yes, I want to buy it if the numbers work. Okay, because to be on my list, it takes quite a bit to get there. And there's only about 150 companies on my list. Okay, so you're selling covered calls, you need 100 shares. That is correct. 1 contract is 100 shares. 2 contracts, 200 shares. 5 contracts, 500 shares. always ODT. No, not 1 day till expiration. It's 1 week. Okay, I buy it on Monday, I buy the stocks on Monday, and I sell the options on Monday morning. Okay, do I buy first thing Monday morning and I sell first thing Monday morning? And I don't look at the computer again till the following morning. It's usually 10 minutes a day. Do you have a list of TOS platforms you share? Yeah, I share that with the people that pay for that privilege. I'm a nice person, but I ain't that nice. Okay? You know, I'm looking for, to be totally honest with you guys, I'm looking for people who want to join our trading group. We got a trading group. It's $100 a month. Okay? Monday, Tuesday, Wednesday, Thursday, between 9:15 and 10 a.m. Monday, we buy all our stocks. Okay? Tuesday, Wednesday, Thursday, we take a look at them, see how they're performing. Friday at 3:30, we jump on, see what has to be adjusted before the week closes out. Yeah, Al, you should, man. You've been making money. You got to start sharing the wealth there, Al. Do you have a list? Okay, yeah. Okay, I do have a list of my favorite stocks. Okay, anyway, what's next on the list? Marvell. We're looking at Marvell next. MRVL. And over here, MRVL. Okay, now, right, 2 seconds. High, low, where was it? Where is it? All right, now I want to take a closer look. Yeah, Doug, it's Eastern Standard Time when the stock market opens up at 9:30 a.m. Eastern Standard Time. Can you talk about how we can participate in the trading group if we work during the week? Okay, Al, yeah, you can always watch the replays. But the idea is if you're going to trade, okay, you get the highest value of your dollar first thing Monday morning. How much to invest in order to join the investment club? It's $100 a month. Okay, and that was, I think I showed you right here. Right, go to the10minutetrader.com, slide down right there. Okay, that goes to Patreon, and Patreon, you get 3 different levels. The highest level is $100 a month, and that is for the live trading. Now, Al, to answer your question, live trading is when the market first opened. So that's the time where you get to work early and say, hey, I need a coffee break, 15 minutes, we're done and over with. How much do you invest in order to join? Okay, we already answered that question. Yeah, I wish it was 7. Yeah, the market's not open at that time of day. Okay, Doug, it's like, hey, I need a coffee break. Take your coffee break at 9:15. You'd be done by quarter of. Maggie, thank you for that, Maggie. Yeah, there's not a whole heck of a lot of us. But try again. Okay, Facebook doesn't want us to keep going. All right, whatever. Can you send an email Monday with your trades? Yeah. I can even send you the copy of the one when it's done. All right, I'll be joining next week. All right, draft options count finally got approved. Cool beans. All right, let's go back to, all right, let's keep continue. We're looking at Marvell, right? Marvell. Okay, so it takes not even 2 seconds. The high, the low, where was it? Where is it? Okay, high, low, where was it? Where is it? You know, that's what I want to see. And if it looks good, then I want to go to the 90-day chart. So if we can't join the call, we can see closer to real time what you did. Well, yeah, but that's just the recording. Okay, you really want to get in first thing Monday, first thing Monday. That's when you get best trades. But then again, you only lose like a half a day. Okay, you can look at it in your lunch hour. Okay, because my actually trading, because I do the podcast first. Okay, it's a 45-minute call. The podcast goes first. It's like, hey, this is James from David Stock Talk. Blah, blah, this is the trades I'm looking at today. Blah, blah, blah. This, that, that. This is what I'm going to do. Blah, blah, blah. All that kind of nice stuff. Then after I'm done, I say, hey, thank you very much. We'll catch you tomorrow. Boom. And then I answer all the questions of all the other people in the trading group. Okay, most people just watch what I am doing, and some of them just copy what I'm doing. Because if it makes sense, I'm relying on your better judgment. I'm just showing you what I do. So you're basically watching me trade, okay? And after I'm done with my trading, you can ask me questions. But most people just do the exact same thing I'm doing. But I don't tell them to. Okay, I always tell them, do your own due diligence. Does it make sense? Marvell, MRVL, do you like it? Rule number 1, never buy something you do not want to hold for a long period of time. Okay, I have Walgreens for 8 weeks. Okay, I think 3M, I think I carried that for 7 weeks this year. Okay, so if you go to my trades, okay, these are all my trades right here. If you look from January 1st, okay, what did I get? CVS, Ford, General Motors, and Macy's. Okay, the next week was Ford, Lowe's, Clorox, General Motors, Ford, and Macy's. Okay, week 3, Macy's, Ford, Capital One Finance, General Motors, and Clorox. Week 4, General Motors, Macy's, Ford, Capital One Finance, Clorox. Okay, week 5, Ford, Key, Macy's, Target, Ford, General Motors. Okay, week 6, 3M, Macy's, Key, Emerson. 3M, Key, Macy's, yeah. Week 7, Key, Macy's, 3M. That's it, just 3 that week. Week 8, Macy's. Oh man, what's MOS? Damn it, MOS. Monsanto? Is that right? 3M. Week 9, 3M, Hewlett Packard, Macy's. Week 10, look at that, 4.6%, week 10. 3M, Hewlett Packard, and Macy's. Was that when Macy's jumped up really big? Week 11, oh, New York City Bank, JWN, Nordstrom's, Ford, Paramount, Albemarle, and Kohl's. Ooh, that was 3.9%. And this week, if you guys want to know, this week I only made 0.9. I didn't make 1% this week. Sorry, I didn't do it. Nordstrom, Kohl's, USB, Ford, New York City Bank, and Kohl's. I didn't make my 1% this week in that account. This account here, which was Verizon, Walgreens, USB, Comcast, Nordstrom, and Kohl's, I made 2.3% net. So no, I don't make my 1% every week. 3 weeks, 0.9 on week 11, 0.9 on week 4, 0.85 on week 3. So do I make it every week? No, I average 1% per week. Okay, so it just so happens that we're in week 12, all right, and I'm up 21%. Okay, so that's more than 1%, but I average 1%. Just bought Domino's Pizza. You own them. I did? I don't think, did I? Oh, DOM, Domino's Pizza. That's right. That's what it was. No way NYCB has 10 years of increase. No, you're absolutely right, Mikey. It doesn't. Apparently, somebody here one night came up with NYCB. I looked at the numbers and it was just too ridiculous to pass up. You know, every once in a while I'll do that. Apple's not on my list. The only reason I trade Apple is because it's on Warren Buffett's list. Okay, there are a few stocks that I will trade because they make so much sense. It's just freaking ridiculous, which was NYCB. I mean, it's like you buy it for $3.50 and you get 2%. I mean, how low can you go on a $3.50 stock? And once I read the news that they're going to be bought out, or they're going to be taken over by someone else for some strange reason. What do you think happened to NYCB even with a Stephen Munchin investment? I have no idea. Okay, all I know is I got it at $3.50, I think it was. Where are we? NYCB. Okay, $3.76 in this account. I don't have it in this account, do I? Don't have it in that account. And I have it in this account. $3.80. All right, so I got it at $3.80 and I sold the 4 and I got a nice premium on that. 21 cents. I bought it at $3.80 All right, $3.80. And I sold yeah. Anyway, got a nice premium on it, so it worked for me. That doesn't look right. Anyway, let's get out of that account. All right, so let's get back to work. Al, 2.43. Good for you, Al. I bought NYCB for fun. I did too. I was in the money too. All right, so DG, Dollar General. All right, we got another half hour to go. DG, 151. Okay, the 150s are going for 230. That's 130. That's not even. Yeah. Hey, it's fun to play sometimes. 150. It's going for 231. I'm losing a buck right off the top. It means I'm only bringing in 130. So Dollar General is a no. Wow. Abbott Labs. ABT. I knew it was on the list somewhere. Abbott Labs. 110, 111. That's a no. Ooh. Last one on the list today. Dickies. DKS. DKS. 221. Yeah, that's a no also. Wait a second. 221, yeah, I lose a buck 85. Yeah, that's only, yeah, no. Sorry. Anywho, that's all of them. My list is complete. Okay, you guys haven't come up with a single decent one for me to look at. Yes, I looked at Smuckers. What's the ticker symbol? Is it SMJ? SMJ. Why the hell would I know that? Nope, that's SJM. KO's always a no. Don't get me wrong, Coca-Cola's been in business for over 100 years. Okay, $6 60.50. The 60 is going for 66 cents. You lose 50 cents right off the top. So you're making 16 cents off of a $60 stock. That's a no. All right, CMCSA. What are you saying, Mikey? CMCSA is at 42 and change. 42.75. You're into the 43? Well, the 43s are going for 30 cents. MRK. Will FinViz give you a list of dividend-paying stocks? Yes, it will. HE. I'm at 43. Scott Derrick. I just came into the stream. Any thoughts on DTJ? Yeah, no. Sorry. I have tons of plays lined up for next week, but they don't match your 1988 strategy. That's from, it was 2008, dude. Right, CMCSA, what we're looking at, DTJ. What the heck is DTJ? Yeah, that's a no. Okay, it has no options available. Sorry, dude. DTJ, no options. I'm new here. How do you feel about Ben? Ooh, isn't that Ben Franklin? Franklin Resources, yeah. That's a monthly, so that's a no. Sorry. You quit and got sidetracked in the middle of Marvel. I fell asleep. Sorry, James. HE, Hawaiian Electric. 11.14. The 11s are going for 25 cents, but you lose 14 right off the top. Take 14 off of there. You're right at 11. You're breaking right at 1% with Hawaiian. But how long has Hawaiian Electric been paying dividends? Okay, it's not in March. Not in February. They don't pay dividends, dude. That's a no. Okay, it looks like Franklin, Ben, B-E-N. Isn't that a monthly? Okay, Ben is a, okay. B-E-N. Yeah, Ben's a monthly. You ever find a website that scours the stocks and options to find good premiums. There's probably one out there somewhere. Got Tesla at 169 today. Well, good for you. What's your thoughts on falling more? Okay, Josh, I don't do Tesla because they don't pay dividends. Okay, it says right up here. Dividend stocks per weekly cash flow. SJM. Did I say SJM? Oh, I said SMJ. I was close. SJM. That's a monthly, dude. Sorry. Okay, Michael. Sorry. Smuckers is a monthly. Whew. Yeah, I don't do monthlies because the premiums just don't work out. See, the 125s is 285. You take the 285, Claire, 2.85. You divide it by the purchase price, 124.79, and that equals a grand total. Whoops. Clear. 2.85. You divide it by the purchase price, 124.79, and you come to 2.2% for 4 weeks. Divide that by 4. Whoops, Claire. Yeah. Say 2.2% divided by 4 comes to a grand total of 0.5%. Hey, last dividend was August. Okay. What is the max per trade? 10,000, 100,000, 1,000, 10 million. USB and DE. Okay, Isaac. What is the max per trade? Well, it really depends on how much you have in your account and what your own personal preference is, what your risk factors are, and what your capabilities are of following multiple stocks. Okay, I do 4 to 6 trades per account. Okay, so the accounts that I show you have anywhere between 4 stocks and 6 stocks per week. That's it. So if I do 5, 20%, 20%, 20%, 20%, 20%. 4, it would be 25%, 25%, 25%, 25%. Okay, either way. So we already did USB, and John Deere is a little out of our price range. Okay. HIMX. I can say no right off the top, but I'll throw it in there anyway, just for the fun of it. HIMX. Himax Technologies. They're a monthly, so that's a no. How liquid are stocks? Just your opinion. Well, Isaac, that's an interesting question because stocks are extremely liquid, but if your stock is down, you want to sell for a loss, that's up to you. I don't sell for a loss. Where did you land with Cisco? We haven't looked at Cisco yet. CSCO. And that is, I believe that is on the list for this week, isn't it? CSCO. CSCO. Yeah, so that would be the 3rd of April. So let's take a look at CSCO. Okay, so Cisco is at 49.78, so the closest strike price would be the 50. And the 50 is going for 26 cents, 0.5%. Oh, OXLC, never heard of them. I bought calls today for JD, MRVL, BMY for next week. I got over 1% each. James, that's awesome. Nice for you. Cool beans. Okay, so OXLC. I never heard of them. OXLC. Oxford Lane Capital Ord. There's no option. That's a no. Which one is better on trading? Is it Forex or stocks? Well, it's really going to depend on what your outcome is. Okay, so Forex, I find that trading Forex, you have to sit in front of your computer looking for setups. And Forex trades 24 hours a day, And you look for setup, so once you get it, you make a profit. If you don't get it, you just sit there until you do. Yeah, I don't do Forex. Too much effort. Me, 10 minutes a day, I sit in front of my computer for 10 minutes, get my 1%, I'm good. Okay, I'm at that point in my life where I don't want to sit in front of the computer. I would prefer to, once per year, you look at your entire list. What do you look for? What changes? Well, let's simplify it. The dividend kings are really easy, okay, because they're dividend kings, which means they increase their dividends every year consistently, okay, and they have options available. So those are basically, I don't have to do anything to those. Now, every once in a while, they'll add a new dividend king to it, but the one they usually add to it usually comes from the dividend aristocrats or the dividend champions. Okay, so they're already on my list. Okay, so every once in a while, new stocks will be added to the dividend champions list or the dividend aristocrats list. Okay, once they get to that point. My main subject is, increased dividends and weekly options. Is there any negative risk selling covered calls if the stock price skyrockets? No. All right, so I'll give you, for instance, let's say hypothetically, let's put MRVL into MRVL. Okay, so Marvell right now, the stock right here that we're looking at, okay, this one right here, right now it's at $66.54. Let's say hypothetically I buy it first thing tomorrow morning or Monday morning at $66.50. That's the current price. The closest strike price would be the $66.50. I'd be losing 50 cents off the top. Okay, so you see that? $66.50. The closest one is the 66. So I lose 50 cents right off the top. So I'm collecting $1.12. Okay, now $1.12 is over 1% of a $66 stock, correct? Okay, let's say hypothetically, I buy it first thing Monday morning. I sell the option first thing Monday morning. I get my $1.12 per share, which is a little over 1%. And then the stock goes up to 80 bucks or, goes up. All right. I still collected my 1%. Whoever bought that option from me, they are entitled to that capital appreciation because I'm not looking for capital appreciation. I'm looking for that safe, secure, predictable, and consistent 1% per week. Do I make it every week? No, I showed you I don't make it every week. 3 weeks this year, I didn't make it at 0.85, 0.9, 0.9 twice. Okay. Is there any negative selling? Yeah, there is. That's what it is. Okay, so if it goes up, someone else is getting the profit and not you. But what is the main focus? Once you figure out what your main focus is, mine is 1%. If the stock goes through the roof, I say, hey, great for that person. Okay, he gave me what I was looking for. Okay, I came, I collected, I say thank you very much. You do whatever you want. And if it goes up, good, great for him. What if the stock plummets? Well, then I suggest you read rule number 1. Never buy anything you do not mind owning for a long period of time. That means if it goes down, you say, oh well, it went down because you bought it for a reason. Okay, never buy anything unless you're okay with owning it for a long period of time. Okay, rule number 2, never sell at a loss. So if I buy Marvell first thing Monday morning at $66.50, I sell somebody the 66, I collect my 1%, and it drops down to 65 or 64, I take that stock into next week, and I sell another dividend, another premium against it. Okay, and then you just have to play with the numbers. What premium is going to give me the closest, the best return? I'll bring you to my cow analogy that I like. Your opinion on Vildmax? No. Yeah. You can sell covered calls if the stock is falling. Yes, you can. However, if the stock turns around, you might have to buy that option back at a loss. Do you sell options Monday morning before the market opens? I usually do all my trades as the market is opening. Okay, sometimes I will do what is called a trigger trade, which allows me to do the buying and selling before the market opens. So as soon as the market opens, both of them are filled instantaneously. Don't forget to like, follow, and subscribe. See, the wife's here. That's what she always says. Like, follow, and subscribe. Because if you don't, she's going to hunt you down.
I know where you live.
If the stock drops substantially, do you continue to sell covered calls? Well, Mitt, that is a question you really have to ask yourself. Because this is a game. If you dance to the music, you're going to pay the fiddler at some point. Yeah, Mike is correct. There is no option trading pre-market. Okay, so if the stock drops and you sell options for less than what you paid for it, you are taking the chance of that stock turning around and going up. So when I did that target trade that I told you about, hold on, let me pull this up to you. EGT, get it out of my way. Okay, from there to right about there, right about there. Okay, I bought it here in July at 135. She dropped, and every week I sold a premium against it. 4 to 5 strikes out because Target pays awesome premiums. It does. Okay, so sold. Right here is where I got my ass burned because I sold an option here and I had to buy it back. Okay, I collected maybe 500 bucks on this day, but the very next day I had to pay out 12,000. So from 500 I brought in, I had to dish out 5,000. No, 12,000. Okay, so you dance to the music, you're going to pay the fiddler eventually. Okay, so last year I lost 3. Target, PPG, and Kimberly-Clark. But I held on to Target right up until December. So from July to December, I owned it before I actually barely broke even. So all my profits from here, all these profits, look at this, all these weeks from July, August, September, October, November, and into December, all those profits got wiped out because of this. This does not happen that often. Go from 110 to 126. Never happens, but it happened here. Okay, so think of that before you jump in. If you're going to dance to the music, you're going to pay the fiddler. Wait, why did you have to pay $12,000? Well, didn't you hear what I just said? Never say never. No, wait. No, if you dance to the music, you are going to pay the fiddler eventually. You didn't sell a put. No, I don't. All right, you're missing the whole strategy. It was created for a 9-year-old girl. You throw the Greeks in there. You throw implied volatility. You throw covered puts. You do cash secured put. You start adding that stuff, and you're gonna confuse that poor little girl. Remember, this was created for my 9-year-old daughter back in 2008. All right, it had to be simple. Had to be safe, predictable, consistent, and repetitive. All that kind of nice, neat stuff. What was the earnings? Was that earnings day for Target? To be totally honest with you, I really don't know what that was. I have no idea what that anomaly was. Okay? Now, Target did that twice in the last year. Okay? See, it did it again. Did it again right here in March. It went from 150 bottom up to 165. Another 15 bucks. Okay, so it did twice this year. Is what it is. So just prepare yourself that I got short that day on Target. The stock good. God watched my trade and does the opposite. Hey, it happens. Okay? So just remember that. This is a game, kind of like Monopoly. You're going to play. You're going to make good, wise decisions, and every once in a while you will pay the fiddler. I don't short. No. Can you explain what the wash sale does? All right, now, I can tell you a whole bunch of stuff that will basically cloud your minds and just confuse the hell out of you. But the trading strategy that I am teaching, that I am showing you here, Simple, safe, predictable, consistent, no way to lose. Okay, it was for my 9-year-old daughter. I can tell you a lot of stuff, but I'm not going to. When the stock jumped, the buyer of the call simply exercised his call option and you had to sell. Well, yes, and I would have lost my stock, and I would have lost $25,000. Okay, so do I pay the $12,000, the $15,000, whatever it was, or do I lose the 25? Pay 15, lose 25. So it was one of those. I was forced to do it. Target had third quarter earning call pre-market November 15th. That was the pump. Well, pre-hours, I had no choice in the matter. Nothing I could have done, unless you were selling uncovered calls. Nope, they were covered calls. Most of the people, what my dad says. I don't know what your dad says, and there's certain things. I know a lot. I really do. To be totally honest with you. But I'm not going to confuse anyone. The strategy is simple. Okay? Good quality stock. Buy before the EX date. Make sure it has options. Make sure it has 20 years of increased dividends. Never sell at a loss. Never buy anything you do not want to hold for a long period of time. My understanding of a wash sale is if you sell a stock at a loss, then buy it back, you are limited. Oh, yeah, well, yeah, that way you don't lose it. You offset, the loss is offset by the gains. Yeah, that makes sense. But, again, it was supposed to be simple and easy for a 9-year-old little girl to understand. If I start saying that stuff, it gets a little confusing. And using a loft, okay, yeah, I got that one. Target dropped on some outrage news. They upset liberal media. It quickly recovered. Yeah, it does that all the time. Okay, lots of companies do that. Okay, but the market maker is the one who has control over that. So he's the only one who knows what the stock is going to do that day. So we're at 11:15. We got 15 more minutes left. You guys want to hit some more questions before I get going? Ooh, AbbVie. All right, AbbVie. ABBV. Ooh, look at that. The 12th of April, 3 weeks away. He sets the books. I have no idea what that means. ABBV, unless you're talking about the market maker. He's the one who makes the decision what to open it up at. Do I want to take profits away, or do I want to give profits up? Wash sale prevents artificial losses taken and reduce your taxes. Okay, that works. So the black swan event can really hurt, like what happened at the start of COVID. Exactly. Okay, because you don't know when a black swan event is going to pop up. It just does. Oh, well, let's take a look at AbbVie. ABBV. Well, not necessarily so. Okay, Galance, not necessarily so. See, the highs up here, and then there was pullback and then rebound. Okay, so it's not totally. So we're going to take a look at that. It isn't. Look at the last week. Okay, we're going to look at that in a second. I'm going to slide into it and you'll look better. Is Barack Obama the market maker? Yeah, that's funny. All right, let's slide over. Oh, we're going to say no right off the top anyway. Okay, and it has nothing to do with the chart. Got nothing to do with the chart. It has to do with the numbers. Okay, the last trade, 178.45. The ask, 180. The 180 is going for 84 cents. That's not even 0.5%. Okay, that's not even 0.5%. So AbbVie is a no. Thank you. No. No. Okay, so it is 11:15. What do you guys want to look at now? Any more questions? Can you explain where you going on the chart, ignoring the numbers? Oh, yeah, let me show you that. Okay, so a year ago, here's where we were. Let's get rid of the numbers because they kind of suck. But, okay, see how I enlarged it a little bit? Okay, we already looked at Bank of America. We'll look at Disney in a second. A year ago, we're at 154.20. We jumped up a little bit to 165, pulled back to the bottom of the year, the end of May. That was 131.18. Went sideways for quite a bit. Last 90 days. Okay, look at the up from last 90 days. 90 days ago it was at a bottom. Look at that nice upward flow. Right to here, and she pulls back. Okay? So, let's look at the last 30 days. Okay, do you see what it looks like the last 30 days? Okay, the high is here. She pulls back, and we have 2 days to the upside. Now, 2 days to the upside, we're at 179. But the 30-day high is 183. So we still have room to go to get to the 30-day high. Okay, remember, the 1-year chart looks like one thing. 90-day chart and 30-day chart looks totally different. Okay, so the 30-day chart looking like this. You got a bottom here. Up day, up day. Thursday and Friday are both up. So more than likely, Monday is going to be another up day. That make sense? Well, let's take a look at seasonality. What does this thing normally do this time of year? Oh, look at that. This time of year. That's AbbVie. Okay. Here's the blue line represents this year. The red line, the last 10 years. Average. In the money or out of the money calls? Well, let's take a look. The current price, the last price is 178. Okay, so the 177.5, you're losing a few dollars. Okay, not worth it. The 180s are only going for 84 cents. Buddy Wally, nice to see you here. Oh, wait a minute, he's not here. Did you see that, Gallants? The chart looks good once you zoom into it. Okay, the next couple of weeks. Okay, let's go into the ups. Let's open this up a little bit more. It's not perfectly flat. If you see the line underneath it, it's going to the upside in the next couple of weeks. And then you look at these right here. Okay, 30 days ago we opened up at 174.78, and the 30-day bottom was 30 days ago. Now it's 173.14. Okay, she goes up, pulls back, goes up, pulls back, goes up, has a top on the 12th of March. 12th. Comes down, makes a new bottom right here, and the last 2 days are to the upside. However, the premium is less than desirable. Sorry. Can you give an example of what mechanism caused a target to lose 12,000? Oh my God. You really want me to relive that over again? All right. EGT. All right. I believe this day right here, 110. Okay, when I sold the 114s, I sold the 114s for 50 cents a share. When it jumped up $16 per share, I had to buy it back and pay out that extra money, which was like, I believe it was 12 or 15,000. I think it was like 15,000. Okay, so I sold it for 50 cents. It is now worth $15 a share. So that times 10 contracts, that's $15,000 that I had to pay out. So I either pay out the $15,000 or I lose $25,000. Okay? 15, 25. Which one? You have no choice. Okay? It was 15, 25. There's no third choice at all. Okay? It's not like, oh, I refuse to answer. Okay? But it's no choice at all. I either lose 15,000 or I lose 25,000. If you dance to the music, you are going to pay the fiddler. All right. 110, it jumped to 126. 126. I owned it at 135. The difference between 110 and 135 is $25. $25 a share times 1,000 shares is $25,000. It's all doing with the math. Okay, remember I bought it back in July. All right, I bought it in July at 135. It dropped all in at 102, comes to 110, then it jumped to 126. Okay, a $15 move. Okay, so I lost 15,000, but I bought it way up here. If I didn't buy it back, I would have lost all of that. Okay, so it all comes down to the numbers. So when you do sell a premium on a stock that is down, you take that risk. So if you want to avoid the risk, you take the money out of rotation and wait before selling calls. Yeah, that's one way. If you let it take the stock, you would have lost 25 grand. Exactly. Okay, so if you take a look at each day, okay, if you take a look at each day, one at a time, what is the high? What is the high? What is the low? What is the average movement per day? Okay, the average movement per day was only like $1 or $1.50. So 5 days, it was only like a 5-day range. Okay, so you look at the range on a 5-day period. All right, I was within the range. I was selling 5 strikes out of the money, which normally would never make that kind of a movement until it did. Okay, it works until it doesn't. You got it? So if you dance to the music, eventually you got to pay the fiddler. Now, at this period of time, I had 6 positions. Okay, so although this one was a losing positions, the other 4 were making a nice amount of money. Alrighty, so it's 11:30. That's my 2.5 hours. You guys all good? You want to talk about anything else real quick before I go for the evening? Anyone? Hey, Exotic 4645781. Hey, how you doing on over there? Followed your strategy this past 2 weeks. Flip and fix. Well, alrighty then. How you doing? How often do you come on? Every night at 9 p.m. One more, please. SBLK. I can tell you right now, Michael, that's a no. But I'll take a look at it anyway, so I can tell you no again. SBLK. Star Bulk Carriers. That's a monthly, so it's a no. Cisco was a no. Well, no for this week. Okay, it might be different next week. I'm a former 30-year bond pit trader. I dance. I'm sure you do. I'm sure you dance. Eventually, you have to pay the fiddler. Finally got assigned JWN, Cava, and USB. Okay. The Flip and Flicks, did you make money on it? Made just over 1%. Okay, that's the goal. 1% per week. You do that every week. That's 50% for the year, dude. I know it's boring. 1% is boring as hell. Okay, but boring as hell. I'll take boring as hell all week long. 1% a week. Don't mind a bit. Because it comes to over 50% per year. Yeah, see? Fine by me too. Okay, safe, secure, predictable, consistent. Can't lose. See, if you don't sell at a loss, you'll never lose. Only way you can lose is selling at a loss. Love to hike. 1%'s not boring. Wait till you've been doing it for a long period of time. Okay, I've been doing it for years. Same stocks over and over again. That way, like I've been saying, 60 some odd days, 2.5 hours a day. Some days 3. Okay, that's a lot of hours, and you guys only came up with 2 that's not already on my list. Okay, you can put up a stock, and I can tell you what's on my list or not. Well, love to hike. Works for me. All right, anyway, you guys, it's 11:30. I got my 2.5 hours in. I love boring stocks, very predictable income. Hey, I'm at that point in my life where I'm perfectly okay with being an underachiever. 1% return, you're an underachiever. Hey, I'm okay with that. Now, it took a long time to find good stocks not on James' list. Yeah. Anyway, oh yeah, that'd be good to have a t-shirt. I have no problem being an underachiever. I like my 1% per week. All right, well, Johnny Price runs it right. Cool beans. All right, well, you guys have a great night, and we'll see you again tomorrow night. The 1%ers, yeah, the 1% club. Agreed, boring stocks provide income. Good night. Hey, TR, not bad. Hey, TR is actually Tootsie Roll, and Tootsie Roll is a dividend king. Okay, you guys have a nice night. And now, 95. Weekly income with dividend stocks.